Oh, the Baja Blast Off?
Royce, you look...
We're blasting off.
All right, guys. Now, we were trying to emulate Royce's hat, but then a secondary meaning came upon us of a rocket blasting off. Let's just say I got food poisoning early in the week, and that's why my voice sounds a little different now. So I'm trying to give the excuse for why my voice sounds the way it does. So I'm hoping these guys will participate much more. Not that I participate a whole bunch, but that they will control the show a little more than usual this week. I am. Yeah. I'm Darin with Arbitrage Trade. This is After the Bell on a Wednesday. And my guests are Daniel Hopwood, top right corner, and Josh Morgan, bottom left. And some, I don't know, fantasy creature in the bottom right, Royce. He's also our CEO. And Quanticus Maximus.
Hey, I have to pick out the big guns. The apes have taken the lead.
We will explain that later in the show. What lead has to be overtaken, which I do not wish for. So I am a teammate, because I'm not a very big contributing teammate, but we'll talk about that. Talk about that later. So let's get on to the markets.
Size doesn't matter, Darin. Remember that.
I'm not doing much motion in the ocean either, though. So all right, so let's go. All right, let's move on here. Let's talk about the markets. It was a very, very green day, not the group, but there was. Like Dookie. Yeah, yes.
Come full circle.
It was propelled by the latest PPI and CPI reports, which at least that's what the narrative is, and that's what, if you believe those numbers. It showed that inflation might be finally stopping, but we'll see. I mean, it's always data dependent. It needs to be several in a row. I can repeat to you what the Fed's going to say, which is, we still are data dependent and we need a few more of these in a row for anything to change. So I'll just go ahead and be a spoiler for you there. But also,
we can replace that.
That's right. Also, Israel Hamas, they decided to ceasefire temporarily. I think the news came out as they've stopped, like the war's over. That's not what's happening. It's a matter of hostages being exchanged for now. So they're stopping what's going on for now, which means that in the future it could be all on again. So anyway, the market did react to that as well. A little extra bump, if you will, today. So what did you bring in for us here, Daniel? You brought some facts and figures in about a flag and stuff.
Yeah, so if you look at, the major cryptos, the S&P, we have a pretty good sized bullish flag forming on a lot of those. And, things have kind of been slowed down the last couple of weeks, really since a little bit before Christmas. And I kind of wonder if this is timing up with some kind of, news event, potentially Trump coming into office, if these things are going to pop. But there are also some headwinds about right now, which are, the 20-year bond is hitting 5% for the first time since 2023. And now there's some speculation that the Fed actually might stop cutting and might actually have some raises in the future, which, historically isn't good for the stock market, right? They're kind of inversely correlated. But we actually haven't seen that to be true with the last few cuts. So there's kind of some interesting things going on.
Yeah, it's both sides that are fighting, the good and the bad, and the evil and the good. It's interesting. I mean, you look at the 20-year, which they don't even talk about much on the news. If maybe that's on purpose. But even if you pull up like the news websites like investing.com or whatever, they don't highlight the 20-year. It's hardly ever mentioned there. So that's kind of interesting. It's always the 10-year that they always highlight. Also, we have a world bond issue right now, and 30-year mortgages over 7% again. So there's a lot of stuff, like you say, that could be it's fighting each other. So it's a matter of which one's going to win.
I mean, it's things that are typically like contradictory. You know, those two things, like the yield in the market typically don't travel in the same direction. You know, exactly. And then you've got like what the 20-year and the 30-year both. I think Daniel said the 30-year or the 20 years hit the same. You know, the highest it was like 0.5 something or 5%. Which is the highest since like November. The 30-year did the same back November of last year, and it's just kept on trucking, which is sure, that's all well and good because that typically indicates kind of an uncertainty or an unease in the forecast of the market. But then you got the market just brushed off everything that happened at the end of last week, that pretty significant sell-off that we had, and just kept on trucking. So these things typically don't run parallel. But for some reason they are. And I mean, it's just, further evidence that a lot of these traditional investings are kind of just, you might as well throw the book in the trash.
No, I think they're just playing chicken. Who's going to see who flinches first? Let them all rise up, and whoever flinches first has the biggest fall.
I did see a volume.
Mr. Wizard, who comes up first? Who wins?
The Fed. Hello. Like that's no brainer. And if the Fed wins, that means the dollar wins. And if the dollar wins, that means we have a correction.
Yeah, I saw a chart of the volume of the top. In other words, these last little bit that we've gone up, the volume is so much thinner than how we got to there before it went up, which is also kind of dangerous when you have very low volume at the top, like the top 100, 200, whatever points it is that it represented. That means that it could come down and come down quickly. If I've been doing my studies right over the last couple of years.
You've learned much.
Thank you. Thank you, a wizard.
Yeah, because if it's thin at the top, you don't have enough buyers to really support it, and it won't.
That's exactly right.
There to stabilize it,
and it'll have to fall down into a supply zone again at some point. So that's what we keep waiting for. But I think it all changes, and I think I said this as a response back to your notes, is that I think this is all just show until all the executive orders get written next week, and then we see, and then it takes a little bit for those executive orders to take action, so to speak, in the economy. But I think once he's in place, the new administration, then we'll get a more realistic look at where we're going. Because right now, I just don't think there's any way to tell that. It's all speculation.
Do we want some tinfoil hat around the inauguration?
Oh, this should be good.
All right, let's do this.
All right, so this is not courtesy of my theory. This is from Zero Hedge. So I put all blame and knowledge on them.
I took my hat off for this.
So
I can email Daniel at.
That is not my email. 2 days ago, 1 day ago, DJI, which is the largest retail drone manufacturer out of China, took off all geofencing on their drones. So essentially, anything that's restricted airspace before, it would just auto not fly into that area. And they have taken it off to return, power to the user, if you will. And this is just coincidentally 1 week before Trump starts his inauguration. And I'm not saying anything is going to happen, but some of those DJI drones, if you look at them, are pretty big and can all do out of sight, reconnaissance, we'll say.
Lovely.
Yeah.
I mean, so if we go by that bulletproof glass thing go like over him now, or like how does
Not
it?
Typically.
Is it? I was gonna say it's only in the front, right? So do they make a bubble this time?
Like a Pope mobile?
Oh God.
Yeah.
I could totally see him doing
but it'll be a Cybertruck.
That's right.
Instead of that big giant glass back windshield, it's just him and his bubble.
Yep.
Yeah, that's right. Well, like you said, though, hey, Royce, any speculation as to why Bitcoin's back up at 100?
Absolutely.
Okay.
I said a few weeks ago that basically it needed to find support around 93,000, which means it had to sit there for about 4 or 5 days. It successfully did that. Our dashboard's completely clear. It's ready to go up now. 118 is the new target.
Oh, okay. Well, I mean, I heard 120 before. We talked about 120. So, and then possibly going to 55 or whatever, right?
That was Daniel, but
Not anymore. Okay.
Back up those high numbers.
I was not using math in that speculation. It was purely emotional and other people's analysis.
But you have some information though, Daniel. Bring it in, the facts here that about Silk Road. What were you saying?
Okay, yeah. That? So the current administration. I mean, say what you want, but they just hate me when it comes to crypto. So they said that they have cleared the Department of Justice to sell the Bitcoin they have from Silk Road. And, this was originally kind of speculated to be the Bitcoin reserve or the start of the Bitcoin reserve that Trump has proposed. And some, obviously Royce predicted it first, but a lot of the news speculation around Bitcoin, why Bitcoin was down, was because they were going to sell that amount of Bitcoin in mass, which would be bearish for the idea of the future administration being, kind of a pro-crypto administration. But obviously, or to our knowledge, they haven't sold anything yet, and Bitcoin is starting to come back, and we're clear for more up, according to Royce's math. So maybe maybe they're not going to sell it in the next 5 days.
122 is the new top.
See,
that's good. I like that. I was very sad the last few days. I was like, oh my god, there's not going to be all-time highs. But maybe we're still back, baby. I don't know. We're gonna see.
Oh yeah,
it's that millennial first world problem.
Did y'all hear about XRP? Did y'all hear about XRP and Bank of America?
Are they getting sued again?
No. Someone said that basically Bank of America was changing out all of their internal infrastructure to run completely on XRP transactions.
Someone trying to pump it, or
go look up. It's all over Reddit. It's all over Reddit. They're like, hey, Bank of America ran 100% today, all on XRP transactions. And I was like, what? That would make a whole lot of sense. Because hey, cross-border tariffs. If all transactions happen super quick over the XRP network, hey, we may not see wires anymore. They may suddenly not be $15, $20. Maybe they'll be, a whole lot quicker and a whole lot cheaper. Wait, never mind. I need that $25. Forget I said anything.
The funny thing is that actually kind of tracks, because a lot of the people that follow like politicians' trades and like congressional trades and stuff like that notice an uptick in Ripple purchases, which has not happened yet. Like up until then, we really haven't seen much as far as congressional buys or senatorial buys in XRP. But then all of a sudden, like in December, all of the people who are probably sitting on these subcommittees allowing things like Bank of America to do the things that they do, all of a sudden started buying up some XRP, and nobody could really figure out why. But it was kind of interesting and then here we are.
Yeah. Oh, I actually found the article and I sent it in the chat.
Yeah, I saw that. It said they used it for 100% of their internal transactions, which is, probably a test for the rest of their transactions.
Right.
All right, Royce, what's the current range on XRP?
XRP current range.
It's
over $3 right now. Holy.
Yep. I switched over just to your chart.
Check my portfolio. I currently actually have 9,300 XRP, so I'm a happy man. Let's see. Current range. Let's see. Ooh. You're pushing it.
I was about to say this is so far out of bounds.
Out of bounds there.
I was going to say
no, it says
jump.
about $4. $4 is the hard range. Right now, we have a hard stop around 310.
And it's at 306 currently.
Yep. So it has to
That
pause
could-
a little bit.
Right. I was gonna say that
They
could
can get
push
there.
down and then go right back up to even higher than 4, right? I mean, that's just the way it works.
That's just the way it works.
Yep.
Imagine buying this guy at 62 cents, guys. It's such a beautiful place.
I don't want to. It makes me want to cry.
What are you talking about? You were right there. See that arrow over there? You were right there.
Hang on, I got a FOMO buy real quick.
We don't have time for that stuff.
Great. I'll short it.
Yeah.
That's right. Yeah, you are a Goldman Sachs person. Let's
It's all about
Let's
market
move on.
psychology, Darin.
Yeah, let's move on. So the question is asked, is the market top incoming? Is the one that we keep asking, and it keeps going higher and higher. Give us your facts there, Daniel, that you brought in about AI and stuff.
So Mark Howard, who is, the founder, CEO of Oaktree Capital, which is one of those big, great performing long-term, funds. And he
Mark Howard or Howard Marks?
Howard Marks, good call.
Okay, just want to make sure.
Karl Marx.
No.
Mark Twain? What?
All the
Mark.
Marks.
Mark my words.
Mark?
Not that Mark. So he called the dot-com bubble, and he's very worried about, like I just said, investor psychology right now. And so he releases, I think a memo, is it every month or every quarter? But in his most recent memo, he talked about how more or less that trading psychology is kind of excited and, really buying and leaning into this, current narrative, which is AI. And that when people get too excited about something that has been rising for too long, we typically see severe damage the other way, right? And, maybe this is a bit of a hammer looking for a nail, because, he did call the dot-com bubble. And this is probably the closest thing to the dot-com bubble since the dot-com bubble. But it does make you think, when these big guys are kind of saying, like, it's, not even specifically on the, the price to earnings or the forward guidance, but investor psychology is looking a little bit, overly ambitious. It does make you think that, are we, maybe getting to a top soon? Are we a little too eager in some of these narratives? We even had the NVIDIA CEO say quantum computing in any reasonable sense, I believe, is like 20 years away, which completely crushed all those quantum stocks that were up, a couple 100% in a few days after the Google Willow thing. So, as these multiple bubbles rise, it does make you think of, where is investor psychology, and is it a little too eager? Darin, I'll leave it to you to say that it is.
Well, I've told you about the pump and dump on future stuff. I mean, that's kind of what's happened, in my opinion, on AI, and they'll pump it again. And that's what's happened on the quantum now, is they try to get that initial money from everybody, all the suckers, and then they'll come in later and get the money when it actually takes place and it's actually making a difference in the world. Not that I'm sore about anything. The other thing is this top. I think it's gonna hold till June now. I think they're pushing it down and pushing it further away, and I think it's between now and June now. But really good chance in June. We'll see. I don't have all the facts and figures to back that up, but all the things I take in, all the things I read, all the things I see, all the different opinions, all the Fred reports that I've seen that nobody else wants to show. I should do a Fred report section in this every single week. I should bring in a Fred report, show it, tell it, and let people see the reality of what's going on.
Darin, let's do a deep dive on that.
Deep dive on the Fred reports?
Yep.
Oh yeah.
You'd have to take that would take a day, 24 hours.
We're just gonna have to cancel them.
That's right. So anyway, yeah, I think the market top is coming. It's just I don't think it's as. I mean, it's been pushed off, and we'll get in. We'll have the excitement of the new Trump administration, and that'll carry forward for a couple of months, and then so that's why I think it won't be for a little bit. I could be wrong, but I still say now my window's down between now and June. Anybody else before we move on?
Oh, yeah.
I'll let Royce bring in some numbers and facts, but if you just take a step back and look at it logically, the valuations of these AI companies, we've talked about it before and for weeks, that the valuations of these AI companies do not make sense. There is no tangible way to really gauge how these should be valued, like what the actual value of these should be. Like you can look at guys like, some of the big tech guys, like just to steal a quote from Linus Torvalds, the guy who who invented Linux, that's literally the back end of the majority of what's going on in AI. He describes AI as 90% marketing and 10% reality. Yep. And then you look at, you got guys like Elon Musk coming out saying that AI has already consumed the entirety of human knowledge. Like every fact and data point that is in existence that's on the internet has already been consumed by AI. They know all of it. They're now writing their own like creative thinking models to come up with more data. And so then you get, AI is going to end up starting to consume itself, and it's just going to get stupider and stupider. And so we keep hitting these roadblocks with AI, and yet the valuation keeps continually going up. And it's just like, I made this point weeks ago. You look at if you could just do a simple like Google search, the 90% of what you get is not like real world people writing out real world solutions to real world problems. It's all AI generated slop, or wrong or inaccurate or misleading, or just, or just straight up wrong. Just incorrect. And like, honestly, it doesn't make sense. Like, and I get it from a futuristic, like a forward thinking outlook. Like, yes, AI is going to be the future, but how it's being valued right now is extremely forward thinking, given what we have what the actual substance that we have right now.
Well, I'm going to put my tinfoil hat on because, actually, I never take it off.
Where is it? I haven't seen it in weeks.
I don't even know where it is. Actually, it might just be at home. But this last administration put a lot of money out there for COVID, et cetera, et cetera, et cetera. So that put a lot of money into the banks, into their hands. So they had to have something to put that money into. And after all that was given to these people, then the big AI thing came out. So they had all that money to put into the AI and then get it pumped up. And I still think there's a lot of that money out there that these guys are hanging on to. By the way, the banks had a great ERs today. Imagine that if everything's being reported truthfully. Of course, they're not going to report the bad side of what's out there. They're just reporting all the good stuff. But all that money that was pumped into the system by these congressional bills, that's, in my opinion, what got this AI pump happening. And it's a matter of if we're getting down to where we just don't have a whole lot of that money left to keep it pumping. So that's my 2 cents worth. Royce?
And since I already have on my tinfoil hat, I have one indicator that you guys don't have. I have my mother-in-law indicator.
Okay.
When my mother-in-law says, I'm going to go buy Bitcoin, it's time to get out. If she says she's ready to go buy AI, it's time to get out.
She buying XRP?
That means
she hasn't even heard of XRP yet, so we're still good.
Yeah.
Okay.
That's true, though, because, if you think about it, once the marketing hits people that it normally doesn't hit, and the narrative hits those people,
oversaturated.
It's hit all the people that have the money, so it's too late then.
Well, no. So this is a lot. So like, what's the guy from Rich Dad Poor Dad? What's his
Robert Kawasaki?
Yes, that guy. He's been warning for 2 years. Get out. It's going to be bad. It's going to be bad, right? And basically, a lot of people, even Buffett, was like, okay, I'm going to go to the sidelines. I'm going to put part of my money on the sidelines. Then AI comes out, and they're like, okay, let's invest here. We have a whole bunch of cash just sitting on the sidelines. And I think it was 2022, they removed, in November, they removed the banking reserve, which means pretty much banks used to have 10% of their money in the bank just in case someone wanted to withdraw a portion of it. They released us from that. So with that being gone, the banks get to put 100% of their money into the market.
Yep.
That means globally, 10% more money is being invested. So until it's exhausted, I don't see an end to this AI craze. It's like it's sort of like saying, okay, and they've done it smart, right? They've staged it. The key players in the game, at least in my opinion, have done it extremely smart. They're like, okay, let's phase out, proof of work for Ethereum. All right, that's fine. NVIDIA, AMD, that's great. Oh, now we have AI. Now NVIDIA switches to that, and NVIDIA carries the baton. All right. And then when Apple released in August, they didn't release their new phones with AI. Their Apple Intelligence, that just came out this last week. Right? So they're basically not basically saying, hey, here's all the stuff about AI all right now, all in your face, and everyone get it now. They're phasing it so that way they can keep the rally going.
100%. I believe.
Wait. So am I hearing this correctly? All four of us were on the same page?
Yeah, it happens.
Let me change my opinion.
That's right.
I'm just saying that it will continue.
I'm feeling
to go
sick
up.
today.
And until it loses momentum, there's nothing else. There's enough to do except ride the wave.
Well, at some point they'll have to take the profits and pay back these loans, etc., that everybody's had to take, and it'll eventually happen. Like I said, it's very thin. It's very thin up here. This air is very thin.
How do you
Something will
know?
happen eventually.
How it's so thin?
Well, now there could be more money because once the new SEC and all the people are put in place, and the new requirements, like you said, and there is even more new requirements coming after the new administration gets in place for these banks. I mean, the
Yes.
regulation's going to go down, and the wild, wild west, as I've said before, is going to get wilder. So, I mean, that could be it too. That could be it. There's just money sitting out there waiting to be used, and they're trying to go into the 401ks, and they're trying to use those funds. They're trying to get approval to use those funds, which they haven't ever used before for investment in the bank. So, yeah, they're going after any and everything and every bit of money that they can get right now.
And I'm not sure if you guys heard about the Ripple dollar. Very hush hush. It's out there. Ripple has its own thing that's backed 100% by the US dollar. Came out about 3 weeks ago.
You mean like Tether kind of thing?
Yeah, like a Tether. No one's talking about it.
Why do we need two then?
No one said you didn't need to, but basically until you have the one that you're going to adopt. And if Bank of America, which is one of the biggest banks in the world, having over $3 trillion in assets under management, are using it 100% for their internal transactions, come on. There's a lot that we're missing that's right in front of our faces.
So there's going to be a lot more digital dollars, and then everybody will keep moving their money from one to another, and investment banks making more money off of that. Is that what's going on?
The beautiful thing about XRP, and not a lot of people didn't realize this, the cost to go from a single transaction XRP is really about half of an XRP, as opposed to if you go from a USDC to USDT or to any, there's literally almost a 4 to 5%, which means 4 to 5% of what you had, you lost. So the gas fees alone, just using XRP on an XRP network, not only makes it more efficient and way more cost effective. So just keep your ears to the ground and, make your money. And just like all the other people who are making their money quietly investing as such.
Is there an XRP ETF yet? Might make some transactions real quick.
I'm just saying.
Leave it up to BlackRock. They'll be first.
Early adopters, like quite literally, early adopters, like early October. It was like, I'm like, what? This is coming. I saw tons of stuff on Reddit and YouTube about it. I'm like, hold on. Okay, let me grab about 10K of that.
I know you've got some investors here too that are into XRP. I've heard you say that.
Yep.
Within Arbitrage. So let's move on to another economy point, if you will, which is jobs. They came out, and again, we're supposed to believe what they're throwing at us. But go ahead and tell us what the numbers were there, Daniel.
Yeah, so you'd think things maybe feel a little soft in the economy, but if you thought that, you were wrong. So the labor market, when jobs were reported for December, There's actually 60% more jobs added than anticipated, which is like a lot. And that was even higher than the previous month, which had also more jobs anticipated added. This, also meant that unemployment dipped a little bit from where it was. So, essentially the numbers got better. And, this is, depending on what you want, not a good indicator for them to cut rates, right? We want things to get bad for them to cut rates, but things, at least on paper, as Darin will come in a moment and say that these numbers will probably be revised, which they always are. Things look pretty good right now. So, as we've gone through all these little bits, it's kind of teeing up for yields to be strong, them not to cut rates, and potentially, I imagine the dollar keep going up, and
brand new administration, first day in office.
Going back to Josh's point, do we get the inverse correlation we're used to, or are we in some kind of new weird paradigm where everything's up and to the right all at once, everywhere, all the time?
Everything is awesome. And I think it's the phrase you're looking for.
We're in a Lego world.
Yeah, that too. Unless you bought bonds when yields went to 1%, and now they're not. You're hurting a lot.
No, they're not. That's not a good place to live.
The Lego Matrix is where we live. As far as employment goes, I mean, a lot of what was the increases over the last 4 years, it was pretty, smart, I guess, if you think about it on the administration's part. But I mean, a lot of that was government jobs. So they did a lot of hiring within what they can control. And then they say, hey, look at all these jobs we've created. A lot of them were government, but look at all these jobs we created. A lot of them are what we could control, but look at these jobs. Now that is the one thing about this December report, again, if you believe it, is that it was more diverse. It was more spread out. It wasn't just a lot of government jobs. So it's also very seasonal time. December is, so it's a good time to really, flaunt whatever you want to flaunt. Or let's just see what January ends up being. And then let's see what the Doge department and their cuts in the government jobs that were created over the last 4 years. But it'll be funny to see if they have to also protect their own numbers while cutting all of the government jobs that were created. So it'll be interesting to see what happens there, in my opinion. So anybody else anything on that? Jump in on.
Oh, I just think that it's going to be funny, the reckoning that we're going to get in February when those numbers get axed, because it's going to be like so many everybody's going to realize it's so many seasonal jobs. The January report's going to come in and it's just going to be bloody. And then we're going to go right back to the same, are we cutting rates or not cutting rates argument? Are the numbers real?
I was going to say, define funny, Josh, when I cry when my portfolio is down.
Is it dark funny?
It's really dark funny. Yeah. Like ironic funny.
Don't you think?
It's an I told you so funny.
Funny if you're sitting on the side with cash. Like,
not
for everything's funny.
Warren Buffett.
Yeah.
All right.
Honestly, I don't know. I think that the jobs with the inception of the AI, with people figuring out new ways to use AI, it's making people who are sick and tired of the corporate grind go out and go, you know what? Can you do this? Can you do this for me? How much of this can you do for me to get me up and going? Like, some people are willing to be self-starters if there's a good enough dollar sign behind it. So whether it's, new jobs that are being created or people starting businesses, the other thing that I've seen is like they're doing everything. And actually, I'm not going to say this. Never mind. I'm going to change the narrative of what I was going to say. There are jobs that you can create using AI that I won't talk about on this show.
You can just tell me later.
Well, I will tell you, if anybody does, go ahead.
Oh, so go ahead.
No, go ahead. You had to finish your point.
Okay. But these different jobs and the different things for like the early adopters of AI say, hey, I'm going to be a consultant. I'm going to go talk to your business. All these small businesses out here, you need this to look at your email, your this, your that, your domains, whatever. Manage this, manage your calendar. I'll do that for you and I'll charge you this. And they're like, okay. Like people who are mom and pop shops, people, who are older that basically, hey, I'm not going to go learn new AI. The same people that won't take an Uber because it's not a cab, right? Or will gladly step up and say, okay, Daniels of the world, please show me how to do this or do this for me, and I'll gladly pay you, right? So, I mean, whether it's new jobs or old jobs, and I've even seen franchises do the same thing. Do you know how many people are selling franchises of their businesses because they've been able to automate so much of their business that they're like, hey, with zero work done, someone's going to give me $30,000, $40,000 for my business. And I just take it and say, okay, here are all the things you need to start it. Ching.
I mean, this new administration is going to be, especially with the new administration coming in, it's going to be very, small business friendly. When you remove regulations, break down barriers, it's going to help increase the little guy. And so, you combine that with the things that you actually can do with AI right now. I can agree with that.
Well, we need to rebuild the middle class, that's for sure, because I think what we've had is a wealth gap that is stretched so far that a lot of the middle fell into the lower now, and then you have all these higher, and the middle has just got screwed. I will say this, though, on the reports that I did see that dug down into, and not just surface level on the jobs report, is our biggest issue right now is full-time jobs being lost. It has gone way down. And it's been made up by all these part-time jobs, these gigs, this kind of stuff that gets counted. So that reckoning is going to happen as well. And you can manipulate numbers all you want to, but when you lose that many full-time jobs, it's not a good thing. It's not a good omen for the future, especially the middle class.
Well, companies are actually getting away with that because they don't have to do the health insurance. You get a fractional CIO, CTO, C whatever, or a fractional admin, or a data. If you don't need them full time, you don't have to do their health expenses.
Yep.
So not having to cover those health expenses, not having to provide a desk for them, it makes it a whole lot cheaper to even cover the number that they ask for. Like a traditional job, like if you're making $50,000 or $60,000 in an IT role, let's say at any ABC company, I don't want to name whatever. Typically, that company is paying almost $100,000 and close to benefits just to keep that $60,000 employee. Yep. By not having to provide a space for them, by not having to provide health insurance for them, it becomes a win-win. It's like, hey, I need you to do this project. Everything's project-based. You complete the project, we pay you. Done. So whether it takes you a week or a month, that's what you're getting paid for.
Yep. It's going to be interesting. Really interesting. Let's move on to the have to be flexible and change with the times. Mm-hmm. So the wager this past week was Carnival, someplace I would love to go on soon. It's been the fact that my memories of Carnival is my last vacation that I ever had planned was a Carnival cruise, but it was during the COVID and it got canceled. So that was not fun. So we're in a much different place now, where cruise lines are hot. And I think they're being held up again by the wealthy, because the wealthy now love to do that. So,
okay, it's back down after hours. It was starting to creep up a little higher after hours. I didn't want to have to listen to Royce complaining.
See, he's
it comes down. 25.
It didn't come down to my channel, did it? All right, so
it did not. It did not.
So the banker and me both had the bottom levels of Carnival, and
it did climb $1 or so.
It did turn out to work out for my teammate. And let's go ahead and I'll pull that scoreboard up. You'll see that Daniel and I both are the laggards. We both have 3. Josh has 5 now, and Royce has 5. So we have basically a tie. It's 8-8.
What?
No,
I think you're looking at the wrong scorecard. Sir.
Am I looking at the wrong one?
Oh,
I don't have the Josh 2 in a row.
That's what I'm saying.
It is.
I'm like, hold on, I'll take that one.
You know what?
No.
I mean,
you know
but I'm
what?
going to be fair. I'm going to be fair.
I get one pass.
happen.
I get one pass for all the pounds I lost this week. Wait a minute, that was a lot of passes. Never mind.
Well, he's an overshare. I'm so sorry.
See that quickly though. I got the right chart up just that quickly, which you guys I guess can't see, but yeah, 3 for me, 3 for Daniel. That's still the same, but Josh now has 6, and Royce has 5. So
stolen the lead.
Blood has been drawn in Quanticus world, and that's why he's wearing his wizard hat to change things around.
Right. He's got to pull out the voodoo.
You shall not pass.
That's right.
I mean, I just
congrats, Josh. The H take the lead. The H take the lead over the Quantitutes, and Josh takes the overall lead, which is not.
When I have the white hat next week, you'll know.
Uh-oh.
that you died and then came back.
Yeah.
Yeah. So moving on though, you do have a chart you want to show us this week. That's not Carnival, right, Royce?
Of course.
So we have After the Bell crayons and charts with Royce Wells.
We're messing with Lululemon.
Oh, I don't want to mess with them.
Yeah.
How are the rich people doing? Go ahead and tell me what's going on here.
I still own it from the last time I talked about it, so please don't tell me it's about to die.
It's about to die.
God damn it.
But it's not going to die horribly tragically. The buy trend is still intact. It just has to hold 369.46. The cool thing is, hold on, let me make sure that this hasn't happened yet. That recycle symbol in the daily, I want to see where those guys are. Oh, don't draw that. Let's come on. Ooh, yeah, that's not looking good. So the compass is the only thing that's holding Lululemon currently up in the arbitrage band trading system. The daily said, hey, it's time. That's what that giant orange triangle is for. The weekly is also saying the same. So both of them are agreeing. Well, now we're just waiting for the arbitrage band on this time frame to say the same. Currently, you see that basically all the bands are still saying this is an overall a buy trend. And for the buy trend to stay intact, it needs to go back down and hit 369.46. It's trying valiantly to do so from the high that it had that was roughly around 417. We're down 376. Not quite there. We got about $6 or $7 more, so maybe about 2% more. And then we should be able to get a bounce off that guy to the upside. And I'll even, if it'll let me, I don't think it's going to let me. There we go. Maybe. I don't know. Let's make that guy green. Yay. We like green. Get rid of that guy. All right. So I am expecting Lululemon overall long term to still make it to somewhere around 471 before we make it to roughly June and yoga pants season. So hopefully you guys get to ride the ride with us here at Arbitrage Trade. That's all I got.
All right. Well, I think every day is yoga pants day.
I wasn't going to say that it's my favorite season.
Boy.
All right. Somebody
Darin,
control this guy.
Don't wear yoga pants to work again.
It feels so good though when I wear it. All right. So all right.
Side of Darin.
Again, he's hey, at least that means I'm feeling a little better.
Right.
So Josh, I can't tell if he's red again because of the tan or because he's embarrassed by the yoga pants.
Yoga pants are too tight.
That's right. So it looks like he's looking around for what he's going to pick for next week's.
Yeah, let's do Well Tower. It's a RIT.
What's the symbol?
Well, WELL. Well Tower.
All well, it's in well. Let's go.
Really like the setup on this one.
Interesting. Very interesting. Waiting to see. Hold on. I'm going to check a couple things before I have my opinion. Interesting.
I thought you might like this one.
Whew. Okay. All right. I went on for 4 hour just to get a full view. Okay. Okay. I like it. I know which way I want it to go now. All right. The ranges are, oh my God. Ranges are huge. 122 to about 145. So let's do 120 to 146. What is that? That's a lot of numbers.
You said 121 to 146?
Mm-hmm.
Okay.
That's 25 between 4 people.
All right. Can we make it 24? So each person gets $6?
You say 124 then?
Yes. No, 122 to 146.
Oh, okay. All right.
Because 121 is outside the range.
Gotcha. All right, Josh.
Do your worst.
Do your best.
So what? All right. So it'd be what would the range be?
It would be 122 to 128.
Yep.
128 to 134.
Yeah, that's the one I want.
Okay. Everything else doesn't matter, right?
Right.
Who's going next?
Nothing else. Don't you break the trend there, Josh.
I'm going for blood this time. I gotta let Darin go. Like,
okay, good.
The Apes have to win.
I think we've decided we're definitely have to go to a random after this season.
Oh no. Let's see. This is good. This is good. This
competitive environment.
All right, then.
Daniel, we're gonna run the boards next season.
You know what?
Okay.
This time, because I think things are going to stay in a range, I'm actually going to go. I'm going to go one up and make them do the exteriors.
Bookend it.
I'm going to do 134 to 140.
Okay.
Make them have to pick one end or the other. So who's next, Josh?
I mean, I'll be nice. I'll let Royce go.
Hey, I got to go. I didn't go last this time.
Daniel.
Yeah, I like that.
I was like, he's gonna say me, but also like he can't get kicked off the show. So
that's fine. That's fine. I will take the 122 to 128.
Also, now we know which way he was leaning. I should have taken the lower. Oh well, we'll see. All right, Daniel, you're above 140, and he is below 128.
In the stratosphere, sir. Let's make it happen. I did it twice this season so far.
I feel surrounded, which we are. All right, guys. Good show. Let's try to do it again next week. Hopefully, I'll have my full voice back for that. It's already starting to come back even during this show.
Good.
So appreciate it, guys, bringing all the facts and maybe making up for what I couldn't bring to the show. And we'll see you guys.
Do we need this guy anymore?
Might not. Just get the AI guy here. He just hosts the show the whole way.
Talk for about 30 seconds and then do a couple of mannerisms for me.
Record it. Let me
do this with the notebook LLM. Isn't that the Google thing that like makes the podcast?
Yeah.
There you go. There you go.
I'll start with so stocks, huh?
Yeah. The beginning of the end. All right, guys. We'll see you next week.
Bye.
See you.